So Jollibee stock has dropped massively. Here's the real reason on why the stock is down. Check this video out. Hey guys, good evening from Singapore. This is Marvin Germo. I just finished our sessions here for StockSmart Singapore. Thank you so much to everyone who attended. I hope that our sessions here will give you the proper insights on how you can trade the markets with confidence. Now, back to business, back to Jollibee. Jollibee stock price hit 320 plus a few weeks ago. Then after that, yesterday or Friday, it retraced to a low of 277 pesos per share. What's happening? What caused it? A couple of days ago, I placed a video focusing on the technicals on what's happening in Jollibee, what are the current support and resistances, where could it possibly go if selling would possibly continue. This video is focusing on the real reason on why it's down. So guys, check this out. One of the real reasons on why Jollibee stock is down is that they released their earnings for the first quarter of 2019. And the sad thing about that is this: Jollibee's earnings was relatively lower than what it was last year. It was 14.7% down, giving it a 1.5 billion quarterly earnings for the first quarter. Now I know that's good, I know that's high, but you have to remember this: in the world of stock trading and investing, it's all about meeting expectation, but not just about meeting expectations, it's all about surpassing expectations for people to buy it at a much higher price. You have to remember this. I've been mentioning this over and over and over again, that Jollibee has been overvalued. Now, there has to be a specific and sufficient justification for people to buy it at a higher price. Having lower earnings is not an excuse. Having lower earnings will push investors. Having lower earnings will push investors to sell the stock and transfer it to a better story, or come back in when valuations and the story is much better. Now, here's the thing. The real culprit on why Jollibee's income is lower, on why Jollibee's income is down, is pretty much because of Smashburger. You have to understand this. April 2018, Jollibee bought 85% of Smashburger. If you've been watching the previous posted videos that I would place about Smashburger, it's dragging Jollibee's earnings. The thing about Smashburger is this: it's not yet as profitable as what most people want it to be. It's a drag on Jollibee's earnings. Why? If you remove Smashburger in the equation, Jollibee's earnings would have been up around 9% for the year. So you have to understand also that Jollibee is starting to expand and grow to other countries outside the Philippines, and Smashburger is part of their plan to get a larger foothold in the United States. The problem though is this: it's not taking off the way they want it to be. It may take a few more years until they really get a foothold. You have to understand, Jollibee has a lot of competition in the US. You have In-N-Out Burgers, you have Shake Shack. That being said, Jollibee's Philippine earnings accounts for 73% of Jollibee's total earnings. And the thing about that is this: Jollibee's sales for the Philippine operations hit around 18% growth. With that, it's around 54.3 billion system-wide sales. Jollibee's doing very well in the domestic front. It's not as good as what it was in 2018 to maintain and establish the very strong growth rate that they have. However, they need to pick up the slack internationally. If you add China to the mix, China's income from Jollibee also declined. So you have Smashburger, their US front, not doing as well as what we want it to be. Then you have China, where its income started to decline and not be as good. In my opinion, Jollibee is still an amazing company. The thing about that though is this: they need to do well overseas. They need to turn around the situation, and they need to get a larger foothold with those particular markets, because it will be a drag. It will be a hit on what its earnings will be for the future. That's why I keep on suggesting this, that the best practices that they have in the Philippines, they must put it and implement it, and at least innovate it to their foreign markets. So will this affect Jollibee over the long term? If your strategy for investing is looking at how resilient Jollibee is and how good they are in terms of innovating, I really believe that this will just be a hiccup, that over the next few years, they will be able to find a way to be able to somehow maneuver these losses, somehow maneuver areas where they need to tweak, close stores that are not doing so well, open it on areas where they know they have a larger ability to make more. So should you be scared? I personally won't be scared as of this point in time. At the end of the day, Jollibee is still an amazing brand. At the end of the day, the Philippine stores will still account for good growth for the Philippine stores will still account for good earnings for the company for the long term. So what does this mean now for Jollibee's 2019 fair value? So you have to understand, if Jollibee's earnings are not as good, it will somehow degrade, somehow lower Jollibee's growth rate for the year. It also means that the fair value for the year won't be as good as what people projected it to be. And you have to understand this, Jollibee right now is already overvalued, meaning lower earnings would significantly lower their value and make them overvalued much more. So here's the thing, back to the technicals, at 270 it's still overvalued. It needs to retrace lower for it to be attractive. So those who are buying right now at 270 are believing that if they will buy it now, they're looking at a very longer projection of Jollibee, not factoring in the loss right now. So if 270 does not hold from a tech perspective, it will drop for 240 pesos per share. So should you be scared right now? Not really. It's not really at the point yet where you should sound the alarm and be scared. There's still so much potential for Jollibee in other markets. You have to remember, there are other possibilities for Jollibee to expand, and it's not just about the Smashburger brand. So to put this to a close, Jollibee's stock is down because its earnings is much lower than what it was last year. Its earnings is not what was projected. Its earnings disappointed investors, and the culprit is Smashburger. So before you panic, before you do anything, your goal should be to base it on the data, to base it on either fundamentals or technicals. Because the way for you to win, the way for you to trade with conviction and confidence is to look at the data, process it, and fit it into your strategy. Because at the end of the day, those who execute with confidence, with the right strategy, are the ones who will win. So this is Marvin Germo. I just finished our Stock Smart sessions here. It's nice to be back. It's nice to be back in Manila this week. You have to understand, I haven't been back in Manila since April. I think it was the time we went to Japan. So I was in Manila lang just for 1 or 2 days, transferring from Japan to the US to Singapore. And it's nice to be here again because we'll be doing Stock Smarts Manila this June, and the largest investment conference in the country, Icon 2019, will be on May 25, 2019. So I'm excited to be back, and I hope this dispels fears, but it allows you to holistically pick the data for what it is. It's not good news for Jollibee though, but I hope that it doesn't cause you to panic, but it would cause you to pick from the fundamentals and the technicals. So that's it for now. This is Marvin Germo from Orchard Road in Singapore, pushing you, nudging you to trade the markets with confidence, because if you know what you're doing, you will win. If you know what you're doing, you can use the stock market to make money for you for the long term. So I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you.